One of the most important questions that we can ask ourselves is, where's the bottom of this bear market? Well, peak to trough declines during bear markets since World War II have averaged about 31%. So there's plenty more to go. The major indexes are now officially in bear territory, or almost there, just a smidgen short, but they're basically down 20%, and many are down even more than that. So we're definitely in a bear market. The real question is, where is the bottom of this bear market, and when will it end? The answer is both simple and complicated, but we can look at number one, average length, number two, technical analysis, and number three, fundamental analysis in order to get an idea of where it could end. In a nutshell, I look for the economy to go into a recession in the fourth quarter of this year, or more likely the first quarter of next year. And I've detailed that here in the past. That means that the stock market will likely bottom in the first quarter of next year. Here's why. Let's go through these one at a time. History tells us that bear markets last about 1 year. And I think this particular bear market might last slightly longer because the Fed is starting their tightening cycle at a much lower interest rate level than they usually do. Normally, interest rates are around 2 or 3% before the Fed starts to tighten, but this time they were starting at 0. So it's going to take more months before they peak out. In addition, the economy is coming into this coming recession with a lot of upside momentum, and so it's going to take longer to turn it around, like a battleship being turned around. Remember that the stock market is a leading indicator of the economy, so we need to see the economy in the middle of the recession before stocks will start to rally. And as I said, I think that's going to take until the first quarter of next year, and possibly even into the second quarter. Another reason for the longer lead time is that the economy got very distorted when the government shut down the economy in 2020, then handed out $100 bills on the street corner to stop the 2020 recession. Technically, the average bear market drops about 30 to 35% since World War II, so we still have a ways to go. And 3 of the last 12 bear markets dropped over 40%, and this could be one of those bear markets. But you may be thinking, well, we're down 20% now, there's not much left to go on the downside. How could the bear market go all the way to the first quarter of next year when we're already 2/3 of the way, or 3/4 of the way, almost to 30%? The problem, of course, is that markets don't go straight down or up. In fact, I think the market will rally this week and probably next, and that will delay the bottom by another month. That process of rallies taking a month to rally and then drop is what will cause the market to drag on and on and on to the lows in the first quarter. Further, we have a good chance to see a 2-month rally in the normal fall seasonal bullish period. So once again, that will delay the low until the first quarter. Let's take a look at the fundamentals. Fundamentally, the Fed is at the beginning of the tightening cycle to counteract inflation. The last cycle, the last peak in interest rates by the Fed peaked at 3%, and the one before that caused the 2008 recession, the peak was 5%. The Fed has already said they will raise rates by a full 1% before the end of summer, but that leaves them at least 1% below the 3% target of the last recession. So I think that it'll take at least until the end of the year to trigger a real recession, but it may take longer. Maybe we have to get to 4% or 5%, maybe higher because inflation is so high. Let's not forget that the best time to buy stocks is in the depth of the recession, which is another reason why I'm looking for the first quarter of 2023 as my preliminary target for the bottom of this recession, of this bear market, I should say. It also coincides with the timing factors that I outlined before. But now the best way to make money is through bearish strategies. but you have to be nimble because we are going to see a lot of sharp rallies during the bear market, and they'll get everybody excited that the bear market's over, but they will be wrong. Now, the best way I can help you, of course, is to subscribe to my Stock Navigator service, where I give you my actual personal trades that I'm doing in my account. Of course, I'm making money so far in this bear market and expect to make more throughout the year. We don't want to lose money in this bear market. So check below and you can see how to click to learn more about it. One of the key things in the Stock Navigator is a daily macro report. And this unique video briefing outlines what's going on in the world and how you can make money from it. Now, I got an email just yesterday, and it said, "Thank you, Courtney. Each daily macro report and weekly Wall Street winners video that I watch, I find absolutely fascinating and enjoy learning from you. You're an amazing asset to have in my portfolio." Well, thank you very much, Robert. Anyway, check it out below, and I will talk to you later.